All right, welcome to Money Club Mondays. Today's October 4th, 2021. We're moving right through the year already. It's pretty amazing. So welcome everybody. We just came hot off the press this weekend of a 3-day Money School Essentials training. So was anybody on the training? Just say aye if you guys were on over the weekend. I'm just curious, but we went over a lot of new information, a lot of changes going on right now in the market, different things that are happening. I saw the stock, the Dow is off to a pretty dismal start to the October trading month this morning. Last I looked, it was down like, I don't know, 300-400 points. Looks like we're down about 378 points right now. So things are happening. We're going to probably see more and more of that. And that's where the Private Money Club comes in. You know, we teach you how to take back control of your money and start being smart with where you're investing, where you're building your retirement, where you're putting your savings. So we want to start looking at, you know, if the stock market's at all-time highs right now, how long can that continue? When are we going to see a correction? Most people are saying it's coming. A lot of people are saying that the correction, or it could be a very large crash in the next year, in the next 2, in the next 3. Is it worth the risk of time getting, continuing to get gains, or is it time to start looking at alternatives and putting your money in other places? So before we started recording, you got to get on live. We were talking a little bit about treasury bonds and how those work in the relationship with interest rates, and when the Fed's going to lower rates, how treasury bonds can increase by 20, 30, 40%. And that's places like that is where you want to have your money. And that's what this is all about. So today we have one of our seasoned investors in the Private Money Club that's going to be joining me. I'll bring Steve on in just a second. He has 3 deals, but just to recap, the Private Money Club is a private network of borrowers and lenders. So if you're looking for opportunities, places to lend your money, anything from quick wholesale flips where you lend your money, you get it back, you know, you get paid interest for a few months and then you get your principal back within 3 to 4 months a lot of the times, to deals that last up to a year, to long-term 3 to 5 year type opportunities. We have a little bit of everything for everybody within the Private Money Club. We have notes, we have turnkey rentals, we have wholesale opportunities, privatemoneyclub.com to get more information on that if you're watching this later on. So if you are a member of the Private Money Club, like I mentioned, Steve Lawson is with us today. He has 3 new deals that we're going to highlight. So if you are a lender in the Private Money Club, or if you're a lender right now thinking about joining the Private Money Club, pay close attention, because these 3 deals are going to be funded by you. So if this makes sense to you, we'll get you in touch with Steve and we'll get these things moving forward with you. As soon as Steve's done, if we have time, I'm just going to go through the flow of somebody joining the Private Money Club right through their first deal of lending that money out or borrowing the money on their first deal. So I'm just going to walk you through real fast the process of what that looks like, just to make sure everybody's on the same page. So with that being said, Steve Lawson, how are you, sir?
I'm doing just fine.
All right.
Great to see you again.
Yeah, absolutely. Thanks for being with us. So Steve has some technical difficulties on his camera on his computer not showing him. So you guys can hear Steve, and he's going to share his screen in just a minute. But Steve is located up in the Indianapolis, Indiana area, right, Steve?
That's correct.
All right, awesome. So he's joining us from Indiana. And go ahead, take it away, good sir.
All right, we're going to see if this is working any better. Oops, that is not what I meant. Are you seeing my screen at all?
I see your desktop. Yeah, you have a couple windows. You see the Zoom window.
Will not let me close what I need to get up to my tabs. Hold on a second.
Yeah, no problem. And if anybody has any questions, just put them in the Q&A box. Okay. Looks like we had a bunch of people on the training this weekend, so that's awesome. Hopefully you guys got a lot of value out of that. We'll be getting some recap emails out to you and stuff later on. But yeah, just looks like Steve's pulling up the deals right now. So if you guys have any questions about anything that Steve is presenting or about the Private Money Club or how any of this works, just put in the Q&A box. We'll answer that as we go here. If interest rates are low, Matt was asking if interest rates are low and set to go up, would that mean this isn't the ideal time to buy? Well, Matt, you know, interest rates are rising a little bit right now. I mean, nobody's really predicting they're going to go very high, anything like that. So nobody knows when they're going to come back down. So I know Chris is buying right now bonds. I'm starting to get into that market a little bit. I'm starting to do some dollar cost averaging into it, I should say, just here recently. So it makes sense to me. But again, that's going to be up to you. So go ahead, Steve, you got it pulled up?
All right, can you see the property specification sheet?
I can, yes.
Fantastic. So since you can't see me, what I'll do, I just pulled up, this is from the perfect loan proposal, the template that you guys prefer. So I'll just kind of look at this right out of there. This particular property, the address is 821 South Brandon Street. That's Brandon. And basically what this is a property in a city called Kokomo. It's about 30 minutes north of Indianapolis. And there's quite a bit up there. It's got about 100,000 people or so. Good job base and a great place to invest. And I've got a particular buyer that buys properties there to buy and hold because he gets such great returns, but he wants them turnkey, already rehabbed. And so I've already got an in buyer lined up. I just need to buy this and do the rehab. It's just a simple, I've been to the house before. It's a 2-bed, 1-bath, a little under 1,000 square feet. You can see a couple comps in here, 85, 95, 99,000, all within, those are all within about 2 to 3 blocks of that house. They're all similar size, just a bunch of little cottages in that area. I've already had, we had our original rehab estimate, and I actually have this is exactly from the contractor's bid down to the penny, $22,081.19. So that is the rehab. Like I said, a lot more than an estimate. That's pretty darn accurate of what that's going to take to make that exactly move-in ready. So the gist of the numbers is we're going to plan on selling it for about 90. We're actually buying it for 42.9. So 42.9 plus the 22,000 of rehab. That puts it all in at about 65,000, and sell it for at least 85, probably 90. So should have a profit of right around 20,000. Actually 19,200 is what it shows here after utilities, maintenance, insurance, and other little things like that. So a profit of around 19,000. And as you mentioned, we've done quite a few properties. For those of you who aren't familiar with us, I've managed over 150 rehabs in the last 5 or 6 years. And a lot of our end buyers, we do some that are like MLS retail end buyers, but we have a list of investors looking for rentals. So a lot of what we have are actually distressed properties that we buy, we fix them up, we make them rent ready, and then we have just a large pool of investors that's ready to buy those for rental properties. And so this one here, we got the contractor lined up. Like I said, it's about a $20,000 profit. The way we pay that's a little bit different than most is we pay the lenders the greater of 10% annual interest. So a lot of these will take between 3 months, maybe 4 if things go slow. The rehab will take 30 days. Then the buyer, then we'll get a buyer lined up. Sometimes there's financing, inspections, so it can take a little bit longer, but when all is said and done, it'll be about 90 days before it closes. And we'll give you the interest on your loan or 20% of the profit if greater. So in this particular example, let's just say the profit is 20,000, 20% of that is $4,000. And so that would be what we're kind of targeting on this is hopefully you'd be able to get a share of profit that's about $4,000 on a 90-day loan. So the total loan amount is about 65,000. So if you think of that from an annual interest, 10% annually on 65,000 would be about 6,500. And so if this is for 3 or 4 months, you're looking at 2,000, 2,200 in interest. But if we make 40,000 in profit, you'd be getting about 4,000 in gain. So like I said, we like to pay the greater of 10% interest or 20% of profit. So that is that opportunity. Like I said, total needed, scroll down, and oh, here's some pictures of it. As you can see, it's got just a cute little bungalow. It's got a new roof, decent siding. It's got a little deck on the back. Inside, it's mostly flooring and paint. Again, nothing fancy, but nothing major either. So that's a little bit more about the property. Anything else I should throw in, Steve?
No, that looks good. I mean, as you show the comps, you have all the comps and everything. You have down to the dollar what you have in it. And, as you mentioned, you have, you do a lot of these types of deals. So this is your wheelhouse, right?
Yeah.
So you are a lot of experience knowing exactly what it's going to cost, how quickly the house is going to move. You have your construction teams ready to roll with it. So there's not a whole lot of challenges that pop up in your deals. And just to point that out, we've had 2 people on right now that are commenting that they work with you and have a great job. Colleen said, Steve does great work. Steve Lawson is great to work with. We have several deals with him already. And Belinda said, I agree with Colleen. Steve is great to work with. So you're doing a great job.
Thank you, both of you.
Yeah, I've had other, members tell me that you do a great job with communication, the paperwork and everything's up front. But before we get to the other 2 deals, can you just kind of walk through, like, if somebody would like to lend on one of these deals that you have, what your process is as far as, do you have like the promissory note and mortgage and everything like ready to go? You send it over, they sign it, or kind of just what the process looks like working with you?
Sure. Good question. So the first thing we do is, we have a promissory note that specifies the terms. And again, it specifically shows that greater of 10% annual interest or 20% of profit that's specified in there. They would sign that up front. And then what we do is once we have that, then we move to closing. All closings go through a title company. And so most of the lenders, and I know that a couple you mentioned, I know at least one of them funds with their IRA. I can't remember if they both do. And so a lot of times the IRA custodian will send it directly to the title company. Even if it's not an IRA, a lot of people prefer to send it to the title company, and that's completely fine. And so the title company will get the funds, and they create the mortgage. They record the mortgage, so the house cannot be sold without that lender being paid back. So that's the process. We get the note first. Once we have the note signed and we move towards closing, a few days later, the funds go directly to the title company. We have a mortgage, we have the closing, and everything is secured.
Yeah, perfect. And then do you pay any monthly interest, or is it just once the deal's done, you pay the 20% profit?
Good question. I have a few lenders that are interest only, and those I pay monthly. But the ones that are the greater of interest or profit, we wait until the end, until we determine the profit and pay that out as at the end when the principal is returned.
Okay, great. But they're all mostly shorter term deals anyway. So
correct.
Not a huge deal. Okay, perfect. And then just one more time on that first deal, how much do you need?
Yeah, so we're looking for right at 65,000. So okay. That's a little bit, which is a little bit lower one, which is probably helpful. A lot of them are in that 90 to 130 range, something like that. And so for someone who doesn't have quite that much, this could be an opportunity to get in on a slightly smaller, lower price property.
Okay, cool. All right. All right. Any questions on that first house? Liz is just asking, what is the risk on these deals, which I can get into a little bit too, but Steve, you just want to kind of explain that briefly? I know you just went through the contracts, but one more time.
Sure. Yeah, sure. Basically, a couple of the risks, there is, as with any rehab, there's a risk that, that there's something there that we didn't see. And the way we lower that risk is we always pay a third party independent inspector. I've got a team, I've got a contractors. We've done quite a few. We have a pretty good idea, but it's always best to pay, to be better safe than sorry, to pay someone to go in and do a full-on inspection. And so that didn't uncover anything, but there's always a risk that there's an unexpected expense in there that would lower that profit. But again, that could impact whether or not you get 20% of the profit. If the profit gets decreased enough, a couple unexpected things pop up. Now you only get the 10% interest instead. And so that's really, I guess the risk is, you get the 10% interest instead of the 20% of profit. A couple other risks would be just timing. Does this get done in 3 months? A couple of hiccups. There are, a lot of contractors are really busy right now. We actually, we did have a couple of delays ourselves. We have several crews, and we ended up losing 2 of them. And so we had to replace them. So a couple of things that we, took a little bit longer than planned. So there's a little bit of risk of, do you get your money and profit in 3 months, or does it take 4 or 5? So a couple of things like that are some of your risks. But those are the main ones that I would think of off the top of my head. Any others?
Yeah,
Stevens?
and Liz, even just to take it one step further, how we just mentioned with the promissory note and the mortgage, you're on this deal in a first lien position, meaning if just like the bank, if Steve was to default, not pay you, not follow along with the terms that are in that contract, in that promissory note, then you're able to then basically foreclose and take over that property. You're in first lien position, meaning you have first rights if something was to not go right. So that's in most of these private lending deals, that's what's securing your money. So that house that you see on the screen right there, when he shows you all the pictures, that's what your 65,000 in this case would be secured by. And then when, just overall speaking, like when I'm evaluating a deal that I want to lend on, I always start with the borrower. So I look at who is Steve, who is Steve's team, how long has he been in business, how many deals has he done in the last 1 year, 2 year, 3 year, 10 years, how long has he been doing it? Is this full-time work that he does? Does he have contingencies in place? Like he just mentioned, if he has his entire contracting crew quit and walk off the job, does he have another team ready to fill in the place or the ability to replace them very quickly? And so, just talking with Steve and listening to him right now, he's checking all those boxes. So everything when I'm evaluating a deal, I'm always thinking, how much risk is going to go into this for me? So the way I look at it then, the lower the risk, the lower I'm willing to lend my money at. So 10% with low risk is a great return. The fact that Steve offers 20% profit just makes it that much better of me wanting to lend to him, right? So how much risk is there? As opposed to, let me give you an alternative. Let's say that we had a brand new, Steve mentioned he's been 150 flips in the last year or two or whatever, and been doing this for 10 years. And you guys can look through his perfect loan proposal that tells you everything about him, right? But let's say I have a brand new investor that's never done a flip before. This is his first one. He has a brand new team that he's working with. He might not know about looking for unforeseen problems that occur in a house. This all comes from experience. So I have a brand new investor borrower that I'm looking to lend to, that's all stuff that increases my risk. So if I'm going to lend to somebody like that, I might say, hey, listen, like, I'm not going to lend you my money for anything less than 20% or 30%, or, hey, I want 50% of the profit because I'm taking on so much risk, or whatever that might look like. Right. So that's all part of the terms and the negotiation of what you're looking at when you evaluate these deals. So once I look at who's the borrower, who is Steve Lawson and his team, then I look at, okay, what's the deal? So that's where we look at the house that Steve just showed you. He needs, so the 65,000 is secured by a home that's going to sell for 90,000. So you got a lot of equity in there, and he supports that claim through comps. So comps are looking at like properties, similar properties that have the same size, that have the same, in the same area, in the same neighborhood, 3-bedroom, 3-bedroom, or 2-bedroom, 2-bedroom, whatever, they're the same type of house. So what those are selling for or for sale for will help us determine what this one's worth. So if the comps are selling for that amount, and that's what tells us this is worth this amount. So if that's 90,000, we know that the 65,000 is supported by those comps. And if something happened, we could take that property and we're not going to lose because now we own a property that's worth a lot more. So first the borrower, then I look at the deal. And then from there, it's the terms. Make sure the terms make sense. And if all that makes sense, then it's just following the process that we teach you, making sure the mortgage is done right. The promissory note is done right. You're lending to an LLC, not an individual. You're lending, to an attorney or an escrow company. You're not wiring money to Steve. Like you said, it goes through the closing company, through the escrow company. So you're doing all those things right. You're listed as additional insured a lot of times on the insurance. All those little things now are also extra steps that are just protecting your money, that are lowering the risk. So that's like everything that kind of goes into it. Is that fair to say, Steve?
That's correct. Okay. Much more detailed explanation than mine. So that's good.
Yeah. Well, these are training webinars. So I just want to make sure everyone's on the same page. Yeah. So the other thing before we move on would be, do you allow any partial loans where he would fund a part of the total amount needed? And if so, where does the prioritization of the position of the liens? Do you do that at all, Steve?
Sure, I do a little bit. The goal is to find a lender who can fund the entire transaction. Right. But I know that you mentioned Melinda and Colleen. I've worked with them a couple of different ways. One is funding an entire transaction purchase plus the rehab, and then one of them didn't have the funds to do all that, and so we found an opportunity for her to fund just the rehab part. So if necessary, I can kind of split it up and say, okay, so for example, in this transaction, and it doesn't have to be exactly the rehab, but maybe I find one buyer who has 45,000, another who has 20. So you have a first position lien and then a second position lien. So I've done that a few times if we need to split it up. So if you don't have 65, that doesn't mean you're completely out. It just, reach out and let me know, and we'll see if we can find an opportunity.
Yeah, absolutely. And so that's one way of doing it. The primary loan would be first lien position. Maybe the rehab only would be second lien position, which is a great way to do it. We also, Chris Naugle will also work with some of our students on funding Chris Rude's deals, for instance. And in that case, like we just did one last week where we had 4 people on one deal, but the way the contract was written is all 4 of them were in first lien position, but they were all considered partners loaning on that deal. So it was proportional. So if it was 200,000 total and all 4 put in 50,000 each, they basically each had 25% stake in that first lien position if something was to happen. So there's different ways that we can make that work if you don't have the total amount. It's obviously easiest though if you can just fund the entire thing. You're on it yourself, you control it all, it's all done. But like Steve said, reach out to him. If there's a way we can make it work for you, we can. Or on these other deals, I'm happy to help facilitate as well. So there's different options for those.
Okay, fantastic.
All right, cool. So all right, so 65,000 on that one. All right, let's roll.
Now the other one I'll do much faster, and I'm just going to start by describing it. It is 2 duplexes side by side. Okay, and so it's actually 2 separate properties, but they're built the same year. They're sorry, I'm trying to multitask here. They each one is the same price. We're paying $72,500 per building. Each building has 2 2-bedroom, 1-bath units, and so I can and each one needs almost the exact same rehab. They got a tenant in one side, and one side is vacant, and it doesn't. Both of them do also need a roof. And so what we're looking for is about 90,000 to buy and rehab. So you can see, the first one listed here. Let me get back up the address. It's 2540 and 2542 Schofield, Schofield. And this is in Indianapolis, and it's kind of a neat area. It's a place that 5 years ago the prices were really low, but they've been coming up, and there's now 2-bedroom, 1-bath houses within a block or two that have sold for 130. There's a multi-million-dollar project. It's actually the oldest golf course in Indianapolis, 1 block over, and the city just invested millions of dollars to rehab that park and the golf course. And so there's just a lot of neat things going on in that area. But these particular properties, they're both, like I said, 1-story brick, which is really nice, as opposed to the older, big ones that have the basements and everything. So they're 1-story brick duplexes, and they're 72,500 each. And so what we're looking for is either 2 people that could fund 90,000 or 1 person that could fund 180. It doesn't really matter to us either way. It can be done either way. But you can see once we buy it and rehab it and we're all in for 90, the comps are pretty consistent. You can see there's 115, 145, and another 115. We think we can get 115 to 120, and our cost will be 90. And here's the breakdown of the major items for the rehab. The roof is the big one. Basically flooring, paint. One of them needs a shower surround, so a couple miscellaneous things. So the rehab is a little over 15. And so we're looking at profit in the range of 30,000. So again, going back to the model we use, if you loan 90, you're going to get the greater of 10% interest on that 90, or 20% of the profit, and the target profit on this one is about 30. So when I told you earlier that I had 2 other deals, it's two duplexes side by side. So
right.
So it could be 1 deal or 2 deals, however, but they're identical.
All right. So that one would have a potential. Let's say we hit the 20% mark and 30,000 profit. What is that?
6,000.
Around 6,000. And that would be if they did it together, right?
No, that's actually on each building.
Oh, okay.
Yeah. So 90,000 investment. So their profit would be about 6,000. Again, the roof takes 3 or 4 days, flooring and paints. I mean, you're talking 2-3 weeks to rehab, so should be fairly quick turnaround again.
Okay. Any questions on that one, you guys? Now I can go into some stuff here.
Yeah, so that was it for now.
Okay. Okay. All right, Steve. So I can, I'll recap this and stuff, but does anybody have any questions for Steve about what he does, about his team, about either one of these deals? Anything of that nature? If not, if you guys want to get in contact with Steve, I'll make the introduction. Just shoot me an email, snaggy@chrisnaugle.com. Actually, I spelled it wrong in the email box there in the comments, but just email me and I'll make an introduction to Steve Lawson for you. If you're in the Private Money Club already, you can also reach out to Steve via Slack. And you guys can connect that way. All right. I don't see any questions coming in, Steve. So it looks like you did a good job explaining everything. So I appreciate you hopping on here.
Awesome. Well, thank you so much for allowing me to hop on again, and hopefully I'll be on with some more in the next week or two.
Yeah, absolutely. Sounds good, Steve. Anything?
Thanks
Any
so much.
last words?
No, that's all I got for now.
All right. Well, I appreciate you being here, man.
Thank
And
you.
thanks for bringing the deals to the Private Money Club. I'm sure these will get funded very quickly. I already got a couple people in mind for them. So
Good. Well, I appreciate that.
Afterwards.
Awesome. Well, thanks, and enjoy the rest of your Monday.
All right. Thanks. You too, Steve.
All right. Thanks. Bye.
All right. Well, Steve is logging off there. Let me see. All right. So, so just to recap one more time on those deals, just to go through it one more time for you guys. So Steve Lawson, seasoned Private Money Club investor. As you can see, a couple of people have already talking about how they've done deals with Steve. Steve actually came to us through another investor named Steve, believe it or not, 3 Steves, right? Blow your mind. Steve Richardson, who does a lot of real estate up in the Indianapolis, Indiana area as well. Also is the founder and owner of CEO Nation. And Steve Richardson does a great job in that area. And I know Steve Lawson and him have been friends, have done deals together for years. So it's always nice having that network. And we met Steve Richardson through other masterminds. You know, you hear us talk a lot about masterminds, but man, it's amazing the connections you make. Hopefully some of you guys took up the offer that we made over the weekend on going to the upcoming Money Multiplier Experience Mastermind in Sundance, Utah in March. We were offering free tickets. So hopefully you guys did that. But just to recap, so what Steve does is he does something very unique where he'll offer you 10% annual return or 20% profit on the deal. So far, all the deals that he's done with our members have come out at the 20% profit, which makes it nice because in most of the deals, as he said, are quick flips, so they don't require a lot of work. So usually from when you lend the money to when you get the money back is 3 to 4 months. On this deal, the first deal that he had is $65,000 with a potential for $3,000 to $4,000 in profit in 3 to 4 months. So you can see that's a pretty dang good return. Number 2, he has 2 duplexes at $90,000 each with a potential profit of $6,000 profit on each one of them. So if you were to fund each one of those, you could potentially make $12,000 profit in the next 4 months or so. So those are those deals. If you're thinking about different sources on how you can fund these, where am I going to get $65,000? Where am I going to get $90,000 or $180,000? Start thinking back to what we train. Do you have an old 401k? Do you have a retirement account? If you do, let's make that into a self-directed retirement account. Once it's self-directed, now you can use your retirement money to make these kinds of investments, these kinds of loans. Okay. But it has to be self-directed. If you're unfamiliar with those at this point, let me know. I can send you over some training. We have a great relationship with a company called a Horizon Trust Company that does self-directed IRAs. Also, Money Multiplier, infinite banking concept policies. So you're specially designed and engineered whole life policies. If you don't have one of those already, what are you waiting for? If you do, where is your money? Do you have any cash value available sitting in there right now? Let's tap into that cash value. Let's get that money to work. You always want your money working for you just as hard as you work to get that money. So let's get that money out there. Or do you have money sitting around somewhere in cash? So start thinking, do I have equity in my home? Can I tap into a HELOC, a home equity line of credit, or can I do a home equity agreement like Matthew Sullivan and Quantum RE talked about yesterday? Do I have money sitting around somewhere else that's earmarked for something down the road where I can invest it now and have it grow for me while I'm waiting? Do I have an active 401k at work? If you're starting to get scared, we talked about the stock market's coming down right now. If you think that's going to continue to happen and you can't move the money out of the 401k, what you can do is take a loan from that 401k. The interest you pay back for that loan goes back into your retirement account, but it now gets that money out of the, in my opinion, risky stock market and gets it into somewhere you can control, something like this. So you can typically take up to $50,000 a time out of your 401k through a loan. So pull that $50,000 out, combine it with $15,000 in cash, and all of a sudden you're making pretty good returns on your money right there. So just a couple ways that you can do that, and different things to start thinking about. Where is my money? Do I have any lazy money sitting around? And where can I get my money to work? All right. So start thinking about that. And then we want to get into a little bit about evaluating the deals. And Jade is asking, can you walk us through our first deal to make sure we cross the T's? And yeah, Jade, let me get into that right now a little bit with you guys. And Matt's asking about the self-directed. So let me just put a link up for that real fast. So if you're in Private Money Club and MSTV, Money School TV, there's a, if you log into your MSTV account, there's a really good training in there. It's a 7-part series that I did. I did 5 or 6 of the videos, and then Chris and I did one, and then Brandy and I did one. So if you log into MSTV, watch the training on self-directed IRAs. My watch is talking to me. Otherwise, you can also go to horizontrust.com/money school and request a self-directed education packet. They're going to send you some additional education, and then Brandy will follow up with you. Brandy is our contact at Horizon that works with all of our students, and she can help you get started. And if you are in Private Money Club, or if you've been through one of our 3-day essentials trainings, you also get a free self-directed IRA through that relationship. So they'll waive the $350 setup activation fee, so you can get that done. So do it through that link and let them know that I sent you over, and they'll hook you up with that. Okay. Candace, just email me and I'll hook you up. I'll set you up with Brandy. Maybe something just got the wires crossed. All right. So back up to here. This is what I was just talking about when we're evaluating deals, looking at the investor, the deals, and the perfect loan proposal. So let me get into a little bit more detail on that, since it's only about, it's only 1:42. So let me do this. All right. All right. And Gene said he has private loans out to Steve right now as well. So 3 people on this webinar right now, on this call right now, are currently actively investing with Steve Lawson. So it's awesome to see. So thanks for sharing that, Gene. Love to see it. All right. I have to get some, maybe I'll keep this board. I kind of like drawing like this. All right. Get one of those fancy screens like Chris has one of these days. All right. So walk through the first deal. Make sure to cross the T's and dot the I's, right? All right. So first step, you got to find an investor to work with. All right. So you got to find a deal that you want to lend your money on. So I'm going to do this from the perspective of a private lender. If you're lending your money, if you're a borrower and you're on here right now, basically you're going to want to understand the psychology and the mindset of what that lender is going through. So that way, as a borrower, you know how to sell your deal, right? If the deal makes sense, it shouldn't take much, but life is a sale, right? Everything in life is sales. From when you first meet somebody and you go on your first date, what are you doing the whole time? You're selling yourself, right? So there's some people out there. I used to do some sales trainings. I don't love it, so I don't do it anymore. But who does a really good job with sales training actually is Justin Colby. If you guys don't follow Justin Colby on social media or subscribe to his to his emails, you guys should do that. I think it's justincolby.com. If not, just put it in so you guys understand how to spell it. Just Google Justin Colby. He'll pop it up. He's an investor out of Phoenix, Arizona. We've done a lot of trainings with him in the past. He's a real big wholesaler, but he's great on training. He does a really good job in sales trainings and teaching all that stuff. So follow him if you guys want to learn more about sales. But so if you're a borrower on here, just kind of understand what a lender goes through. All right. So first step, number one, is you got to find a deal or an investor to work with. All right. So the way that we all do this is through the Private Money Club. The Private Money Club is going to introduce you to people like Steve Lawson, people like Michael Kurse, people like Kevin, people like Chris Rude, and I'm sure I'm missing people right now. We have a ton of seasoned investors that have joined the Private Money Club. Devin Burr, last Monday, you guys remember I talked about 3 of Devin Burr's deals. I think one was like 45, one was 100, and one was like 160. All 3 of those got funded from that webinar that we did Monday by Wednesday through you guys, through people in the Private Money Club. So Devin Burke, and you know what he told me? He's like, I can't believe I never thought about using the Private Money Club to get funding for my deals. He goes, that's the easiest time I've ever had getting funding for my deals. And Devin does a lot of deals too. He does a great job with them also. So number one, find the deal. So we do it through the Private Money Club. Number 2, like I was talking about a minute ago, then what we want to do is let's figure out who that borrower is. So I always start there because it could be the best deal in the world. It could be worth $100,000 with no work needed. Buy it for $30,000. Nothing could go wrong. It's a perfect deal. But if I don't trust the borrower, it's a no deal for me. Okay. I got to understand who the borrower is. And that's going to set up the rest of the stuff for me. Because again, like I was saying a second ago, what we're looking at with a borrower is risk. Okay. Is it high or is it low? So what are some factors that go into risk when we're looking at a borrower? Can you guys type them in? I want to make sure you're following. What are some factors that I want to know about the borrower that is going to either increase risk or lower risk when I'm evaluating a deal? All right, let's see. How many deals have they done? Time doing it, experience, how long in business, previous returns. Absolutely. Previous returns is a good one, Sean. Thanks for saying that. So yes, what is their experience? How long have they been doing this? How many deals have they done in the past? And how many deals are they actively doing? Just because somebody flipped 100 houses in 2005 doesn't mean they know how to flip houses in 2021. Markets change, times change, right? So when did they do all these deals? How many are they actively doing now? If they're doing 3 to 4 deals a month, did they just ramp up to that where they're maybe taking on too much? Or have they been doing 3 to 4 deals now for 3 years and this is just common business? They constantly are rotating through 3 to 4 deals, right? So previous returns and success rate. Absolutely, Liz. So then it asks, well, out of those 150 deals that you've done over the last 3 years, how many of those did you lose money on? Okay, you lost money on 5 of them. Out of the ones that you lost money on, what happened to your lenders, right? What happened to your private lenders? If your private lenders lost money as well, maybe. I know a lot of investors, Steve, Chris Rude, for example, that even if another guy that does a great job of this is Jack Petrick. These guys have lost money on deals, but guess what? They've always made their investors whole, meaning they've always paid their investors even when they lost money. So is that somebody that you would want to do business with if they've done that in the past? Again, it's no guarantee that they'll do it in the future, but your reputation in this industry is everything. So guys like that are showing me they want to make sure they have a reputation that's as high as it can get. And if they're paying money out of their pocket to make their investors whole, that says a lot about that person. Would you agree? So that's the stuff that we want to look at. Colleen, you got your money everywhere. Colleen said, Jack Petrick is awesome. We have 3 with him. So organized and such a stellar company. And yeah, I agree with you 100%. And Jade said integrity. That's a great way to look at it right there. Integrity. I love it. So that's what we want to look at when it comes to who's that borrower. And then right here, checks off, checks off, checks off. I like it. Okay, I'm happy with this. But I'm keeping in the back of my head, what is that risk level? Is it high or low? Because depending on if it's high or low, that's all going to come into the negotiation of the terms of that deal, okay? Number 3. Deal. So if everything checks out with the investor, with the borrower, then let's take a look at the actual deal itself. Again, let me ask you guys, what are some things that you might want to know about that deal? Or what are some different pieces of information that you're going to want to see? Type those in the chat box. All right, so the ARV, okay. So the ARV is after repair value or after rehab value. So what that means is if he buys it for $60,000, puts in the work that he needs, let's say it needs a roof, it needs paint, it needs a new kitchen. What is that home worth after all the repairs are done in that property? So that's the after repair value. That's typically going to be what the property is going to sell for as well. Okay. So the after repair value, what it's worth after all the repairs are done. All right. So Farzaneh says if it looks logical, yeah. So that's going to be looking at and evaluating these numbers that we're talking about. Colleen says how they pay. Okay. How they pay is going to be more in the terms. So we'll get to that in just a second. First, we want to look at the deal itself. So comps is a big one. Comps are what are going to support the the ARV, the after repair value. So if we say that that house is going to be worth $90,000 after repairs are done, and that's what it can sell for, why do you think it's going to be worth that? How do you come to that number? That's what the comps support. So the comps stand for comparables, comparable market analysis, CMA. In the commercial world, it's known as a BPO, a broker price opinion. These are all names for comps. What is the property worth? Comparing it to the other properties in that same area that are similar to that property. So if we have a 3-bedroom, 2-bath, 2,000 square foot home, we're not going to compare that to a trailer, for instance, a mobile home. We're going to compare that to other 3-bedroom, 2-bath, around 2,000 square foot homes within the same area. We're not going to compare a 3-bedroom, 2-bath, 2,000 square foot home in the next state over, right? It's got to be within the same area with everything basically the same. Now, if it's 3-bedroom, 2-bath, and the only thing comps are 2-bedroom, 2-bath, and 4-bedroom, 2-baths, then there's different calculations we can do that will adjust the price to make up for the extra bedroom or the no bedroom, or if the home has a pool versus not having a pool, or little things like that, right? But mostly saying it's got to be very similar. So that's the comps. So the purchase price and the reno costs, absolutely. So how much are we buying it for? How much rehab are we putting into it? That's all stuff that we need to know. Yeah, do they have a buyer? That's actually a pretty good one. That kind of combines this and this right here. You know, do they already have somebody in place that's ready to buy the property? And you see that quite often, especially in markets like we have right now that are very, very hot. A lot of these investors, they have lists. They have buyers lists, people that are specifically looking for houses. And if they're very good, they have strong relationships with realtors in the area that know that they provide this type of housing to the community. And these realtors are always staying in contact with the borrower, asking them, hey, what houses do you have coming on the market? And 9 times out of 10, these realtors will know, and they'll tell their clients, hey, this investor that I know is rehabbing a home right now. Let's go take a look at it. It's not done yet, but come take a look at it, because as soon as it's done, it's going to sell very, very quickly. And let me ask you this, as a borrower, how would you like to know that as you're doing the rehab on that property, as soon as you're done, you have a buyer in place ready to close on that thing immediately? How many of you would like to know that? Absolutely, right? Because that way you're going to put that freaking fire under your contracting team and say, you guys better get the damn thing done because I got a buyer waiting and I need to make some money so I can pay out my investor and make my profits and move on to the next deal, right? So speed of how long. So that's the other thing with the deal. How long is that property going to sit on the market? What is that area? Are homes selling? What's the average days on market for a home that's priced right in that type of asset class? You know, if it's a middle class single family home for a family in a family neighborhood, what's the average for that area that the property is going to sit? That goes into holding costs and all that. But so all very, very important stuff. And so what we've done through the Private Money Club is almost all of the borrowers, all the investors are required to complete something called the perfect loan proposal. Okay. So the perfect loan proposal is going to give you all the information about the borrower, everything from their experience to who their team is, to how long they've been doing this, to other deals that they've done. And in a lot of cases, even inside the perfect loan proposal, the borrower, the investor will put their credit history. So they'll actually pull their credit reports and they'll put those right inside there. They'll show you bank statements. They'll show you their business accounts. So you'll see anything that the bank would require is what will be in this perfect loan proposal. So you as the lender will have everything you need to know about this investor. Okay. And then obviously you set up a phone call. You can talk with them about it, ask them questions, have them clarify things that are in there. So you know everything you need to know. That's all in the perfect loan proposal. And you'll notice the perfect loan proposal is broken up into two sections: the borrower section and the deal section. Okay. So when you start looking at these perfect loan proposals, you'll see it's clearly broken up into these two sections. And Steve, for instance, can send you both together or separately, depending on what part of the stage that you're in. So that's what we want to look at right there. So that's why it's very important to understand these two, because that's everything that you're going to see within the perfect loan proposal. And then from there, if everything checks off, okay, we like the way the deal looks, or the way we like who the borrower is, we like the way the deal works, it all makes sense. You know what their what the private money loan is, what the amount is, makes sense for what the ARV is, which is supported by the comps, and then the days on market. Again, do they have that buyer in place? Like somebody was saying, how long are they going to have that property? So as Steve was saying earlier, for example, 3 to 4 months is what they're seeing right now from when they buy the property. So they buy the property, they do the work to it. What do they do when they do work? They increase the value. So they buy the property, they increase the value, and then they sell the property. So they profit out, they cash out, they sell it, they close it, whatever the exit strategy is. And you'll see different exit strategies too. So for Steve Lawson, his exit strategy is he buys, he fixes it up, and his exit strategy is to sell retail. You'll see some of our other investors, for instance, Devin Burr, he buys, he fixes up, and then he refis it at the bank. And that's how he cashes out his investors. He refinances traditionally through a bank, which is known as the Burr method, BRRRR, buy, rehab, refinance, rent out, and repeat. So that's the strategy he's following. Michael Kurse, who you'll see come on some of these, he's an investor, a borrower within the Private Money Club. He has a 5-year exit strategy for all his deals. So if you invest with him, you're at 5 years, you're in with him, but it's a different exit strategy. So that exit strategy is what's going to be, with this deal right here, 3 to 4 months is what's expected from start to finish. So the deal, the rehab, the exit strategy, and that's what's going to give you all that stuff. Once you know everything, all the numbers, you know everything about the deal, then that's when we get into the terms. Okay. Which I'm going to move into now. I'm going to erase this board, and then we're going to get into the terms. Any questions on any of that stuff? And real fast, Jade is asking, does the Money Club vet borrowers? We do not, Jade. It's very important to always do your own due diligence on everything that you see in the Private Money Club. However, you can talk to other members. As you saw on here, we had Jean, Colleen, and Belinda, I believe it was, that have all done deals and are very happy working with Steve Lawson. So you could talk to other people. What is your experience within the Private Money Club? You know, who are they working with? As I said, how do I know Steve Lawson? Through Steve Richards, who vouched for him. We've known Steve Richards for years. He's an incredible business guy in the Indianapolis area. So through the network, it starts to, it vets somebody as well as you can vet somebody. Does that make sense? So I'm not going to ever tell you it's 100%, but would I feel comfortable with somebody like Steve versus somebody I met at a random meetup or a real estate association meeting, that I knew nothing about or had nobody to vouch for him? Yeah, I would trust Steve a lot more in that scenario, right? So it's all about risk levels. There's never 100%, but it's always risk. All right. So that's all stuff that's going to lower my risk when I'm looking at evaluating who that borrower is. Ethan said, have you ever had a good borrower pass deals with you, bring you a specific deal that was too risky for you? It's I wouldn't say too risky, Ethan. It would be more, it just does not fit what I'm looking to do right now. So for instance, I've had investors bring me deals, but they want me to lend my money for 2 years to them because it's a bigger project and more extravagant. And it's just, that's what's needed. I need to lend my money for 2 years. At the time, I was not in a position to lend that kind of money for that length of time, even though I knew that investor very, very well and trusted him 100%. The deal just wasn't right for me at that time. So it's not a risk factor as much as I would say it's just a timing factor, right? Is the timing right for the deal? So hopefully that helps, Ethan. So let me delete this in order to get into terms. Okay. So once we have decided we like the borrower, once we decided we like the deal, once we decided, okay, this makes sense, I like the timing of it, it makes sense for my situation. Once all of that is checked off, right? Then that brings us to the terms of the deal. Now, in Steve Lawson's case, what you guys tell me, what are some things that go into the terms? Like what are terms, right? All right. What are some things that go into the terms, you guys? What would you want to know about this deal? If you were going to lend your money on a deal right now, what would you want to know about it? Okay. Okay. First off, how much, right? So how much am I lending? And then does that cover purchase, rehab, holding costs? So how much money am I lending, right? So does that cover the purchase of the property? Does it cover all the rehab as well? Does it cover the holding costs? The other thing, skin in game. Some people, depending on who the borrower is and what the deal is, they want the borrower to have some skin in the game as well. So basically, and what I'm saying by that is, let's say it's $120,000 total for the purchase price, the rehab, all the holding costs, everything that goes into that deal. They need $120,000 to make that happen. Are you willing to lend 100% of all of that? Or do you want that borrower to have some skin in the game as well? Maybe you want to borrow, maybe you're willing to lend 100,000, but you want that borrower to have 20,000 of their own money in that deal as well, right? So how much are you lending? What does that cover? And does the borrower have any skin in the game as well? Or are you funding 100%? Again, it depends. What's that risk level? Who are you working with? What are the deals? All that stuff goes into all this that I'm talking about. We already know all that. So we have an idea in our head. What is that risk level? What am I willing to do? And then the terms are all negotiable. Number two, what else would you want to know? Let me see. Interest rate. Absolutely. All right. So interest rate could be annual annual interest, right? So I'll just use Steve Lawson as the example since we just went through his deal. So he was offering 10%, or so another way, instead of interest rate, you could be profit. So in his deal, he's willing to share in the profit. So sometimes instead of paying you a flat interest rate, they'll pay you a profit of the deal. So in this case, 20% profit. And in Steve's case, it's whichever is higher. So that's the other thing is how much, by me lending $120,000, what am I getting back as my return for lending you the money? That's what the interest is. And the other thing that you can look at, it's usually either written out as an annual interest rate or a profit on the deal. The other thing that you'll see come up a lot is what's called points. Okay. Points are a flat interest percentage point on the overall lending amount, no matter how long the money's lent out for. So what I mean by that is if I lended $100,000 at 10% and my money got returned to me in 6 months, let's say from when I lent it out to when it closed, I got it back in 6 months. Well, I'm not making 10% of 100 grand. I'm making 10% annual return. So if it's paid back in 6 months, I made $5,000. Does that make sense? Because it's 5%, which is half of 12 months. You know what I mean? So I made $5,000 on that. Now, what points are, 1%, 2 points, 3 points. So points are just 1, 2, 3%. Points are what you'll hear the most, 1, 2, 3 points, or none. A lot of the deals in the private money club don't have points. It's a risk thing. If I'm dealing with a new investor, I'm going to charge them more points because it's fine and dandy to know that I'm going to make this. But if it's not worth it to me to make 10%, if they're going to return my money in 3, 4, 5 months, maybe I want to know that I'm going to make a better return, even if they return my money quickly. And the way to do that is through points, because what points are is if I do a $100,000 loan and I charge 2 points and I get my money back in 6 months, I'm still making my full $2,000. Oops, you guys can't see that. Sorry. So if I'm lending, anyways, you guys get the idea. So if I'm lending $100,000 at 2 points, even if I get that $100,000 back in 2 months, they still owe me the whole $2,000. Okay. So the interest amount and the points can be worked out together depending on the deal, and points are negotiable. All this stuff's negotiable. Like I said, it's good to take sales courses because this is all stuff you're going to be negotiating back and forth at times. But the nice thing is, if you're dealing with we call them seasoned investors, experienced investors, somebody like Steve Lawson, somebody like Chris Naugle, like they know that they have 10 different lenders they could go to get money. So a lot of times they're not really willing to negotiate. They might be able to make some different changes, like he said, and how the money's paid. Like some people want interest paid monthly. Some people don't mind waiting till the end. Like it just depends. So there is some stuff there, but odds are Steve's not going to say, you know what, I'm going to give you 2 points on top of the 20% profit, because he doesn't need to. But if it's another investor, if it's higher risk, then you say, hey, I want points on this deal if I'm going to do this. And that's very, very common. And you see points on mortgages from the bank. If you guys have ever bought a house, I mean, there's points on that deal. You can see them. A lot of times the mortgage brokers build the points in because that's how they get paid, right? So it's very, very common when it comes to loans. All right, so what else do we want to know about the terms? How about length? Yeah, Farzaneh wrote it there, length of term. So how long are you lending the money out? So I'll give you an example on a Chris Naugle deal. Chris Naugle's deals are set up for a 12-month term, okay? Meaning he's going to pay out 12% annual interest for a term of 12 months, meaning he has 12 months that he can take to return your money before defaulting on that loan. Okay. However, how long does Chris Naugle deals typically take? $3 to 4 months. So just because the term is 12 months. That's what he has to perform by. However, can he pay that back sooner and can he close out that loan sooner? Absolutely. And in that case, 12% interest, $100,000 loan, you're basically getting $1,000 a month until you get the return of your investment returned. So in that case, 100,000 goes out. So again, right here, the amount, $100,000, the interest rate is 12%. The length is 12 months. So what's going to happen is your $100,000 goes to Chris Rude. He pays you $1,000 a month until the deal closes, and he returns your $100,000 back to you. Plain and simple. Very, very easy. Right there. Amount, interest rate, length of term. So those are all the terms in the deal. And then all of this stuff. Any questions on any of this? Let me erase. If you guys have any questions, put them in. Okay. Now, we've evaluated the borrower, the deal, the terms. Once we have all of that figured out, then where does all this stuff go? Right? So how does that work next? Borrower, deal, terms. Now what? Okay. So here's where the legal part comes in. This is where the protections come in. This is where, if you're working with a seasoned investor, a lot of times they have these documents ready to go. They use them over and over and over again. If you're not comfortable with that, have an attorney look it over for you. Who pays for the attorney? That's all part of the negotiation. A lot of times if you're lending your money, you could say, listen, I'm willing to do this, but you're going to pay for an attorney for an hour or 2 hours of their time for them to review all the contracts and make sure this is legal. It's going to cost $300. That comes out of your side, or whatever the case is. Again, that's part of the negotiation. But what does that look like? So number one, you have a promissory note. Now, we talked about this in a training a couple of weeks ago. So if you missed that training, I went through a couple sample promissory notes and mortgages and pointed some stuff out on how they work. So go to Chris's YouTube channel. So YouTube at the Chris Naugle. You're just type the Chris Naugle. Make sure you subscribe and ring that little bell that's on there. It'll get you notifications whenever we put up new trainings. But all of these trainings that we do on Money Club Mondays are put on a playlist on Chris's YouTube channel. So you can go on to the playlist Money Club Mondays and watch the training from 2 or 3 weeks ago when we went all through promissory notes and mortgages and how these works. But I want to go ahead and show you the basics of it right now while we're still on here. So number one is going to be the promissory note. The promissory note highlights the terms. So everything we just talked about, what those terms are, go into the promissory note. The promissory note basically is a promise from the borrower. That's a legal document that they sign off on that says, here's how much money you're lending. Here's how much I'm going to pay you for that money. Here's how long I have to pay you back. Here's how that money is going to be paid back, whether it's monthly interest, whether it's just one big balloon payment at the end of it, whatever it is. All of that goes into the promissory note. Okay. The promissory note is then connected as a legal attachment, as a legal document to the mortgage. Or what's known as the deed of trust. Okay. So the promissory note is attached to the mortgage or the deed of trust. The mortgage or the deed of trust is just like any mortgage that you've ever signed when you bought a home before. It has all of the legal mumble jumble important stuff right inside of there. So that document's very, very important. Again, if you're in the private money club, we do have sample promissory notes. We have sample mortgages and deeds of trust that you can take a look at to use as templates or start getting a feel for them. But you do want to have somebody look that over for you. Now, once you get a good one that you're using over and over, I don't see a problem. That's what we do with these things. You can use them, but please have an attorney look it over. I don't want to be responsible for that. So make sure you guys do that. I did talk with Brent Carlson. A lot of you guys know him with Corporate Capital, and he's working on putting together a little package for anybody that wants to do this stuff. He'll be right there to help you out with all this stuff. So I'm talking to him this week about that, and I'll post that up in the Private Money Club for you guys as well. So once we have the promissory note and the mortgage with all of that information in there, all the terms, everything about the deal, what's going on, this is what will put you in the first lien position. So the first lien position, again, gives you first right to take that property in the case that anything in the promissory note or mortgage is not done by the borrower. If anything in there, if they default on anything, they don't follow along with what is stated in here as the first lien position holder on that mortgage, you can now foreclose and take that property over. These documents do need to be recorded at the courthouse. So you need to make sure that the escrow company, the closing agent, the attorney, whoever is closing this deal, that they are recording this at the courthouse as well. That's what makes it all officially legal and gives you the rights as the lender to be able to do what you need to do in the worst case scenario. Okay. A couple other little things that you're going to want on there. You're going to want to make sure that you as the lender, this will be in the mortgage document, that you as the lender are listed as additional insured on the subject property. So that way, if there's a fire, if there's a natural disaster, if some contractor on Friday afternoon was drinking beers at the job site, got tired, forgot to unplug something, lightning hits and fries the place or something like that, right? Whatever, things happen in real estate, right? In life. That you're protected. If that home goes up in flames, you're still protected because you are listed as additional insured. So what would happen there is you call the insurance company, hey, I'm on this insurance policy. You know, the house just burnt down. I need to make sure that I get my money back on that deal. So make sure that you're listed there. It gets recorded at the courthouse. Everything's done. Also make sure, you know, once all this is completed, once all this is signed, once everything is done with the attorney or with the closing company, then you go to step 3. Running out of room here. I'll put it right here. Wire funds. That's when you go ahead and you're going to wire the funds. And when you're wiring funds, there's a couple things to be very, very important. Let's see, A. So first off, you never want to send money to an individual. Remember, you're always going to loan money to a company, to an LLC, to a corporation, never to an individual. And that's just due to like all the rules, Dodd-Frank rules and things like that that regard private money lending. So you never want to be caught lending money to an individual, always to a company. Also, you never want to wire funds directly to a person or a corporation, like to their account. You always want to wire the money through the escrow company or the closing agent, the closing attorney. That's where you want the money to go. Let the escrow company, let the attorney make sure that it's facilitated properly. And that way everything is done correctly, because that escrow or attorney is not going to accept the money if they don't have everything right with the promissory note and the mortgage and the deal itself as far as the closing goes. So you always want to make sure you're sending your money to an escrow or a closing attorney only. And that's just additional things that are going to protect you and your money. So Jade's asking to be clear, you're recording the deal in the state of the deal. Correct. Yeah, it's going to be recorded at the local state, at the local courthouse in whatever county or town that property is located in. All right. So just to recap one time, I know we're going a little late here, so thanks for sticking with me here, guys. When we're evaluating deals, we look at the borrower, we look at the deal. Those are on the perfect loan proposal. We negotiate the terms. Those terms go into the promissory note, which is connected to the mortgage, which gives you protection on your money by doing all these proper things, recording at the courthouse. When you're sending your money, always never to an individual, always to a company only, as well as making sure it goes through the escrow or closing attorney. So does anybody have any questions on any of that stuff right now? Did that help anybody? Did you guys learn something? What do you guys think about this board? I might have to keep it. I might have to buy my wife a new one. I kind of like it. What do you guys think? Should I keep the board or get rid of it? All right. I do have fun. All right. Well, I appreciate it, guys. Oh yeah. Okay. You guys like the board. All right. We'll see. Might have to have you. I'm gonna take a picture of this and send it to my wife. I'm gonna do it right now. I love you guys. You know that? All right. All right. So that was a lot of fun. All right. So that's it for today. Thanks for being here on Money Club Mondays. Like always, if you guys need anything at all, please give me a shout. snaggy@chrisnaugle.com. Otherwise, we'll see you next week on Monday. We got some good trainings coming up this week on Wednesday on the wealth webinar series. We're going to be talking about using cash value lines of credit for taking loans from your IBC, specially designed and engineered whole life policies. So that'll be pretty interesting conversation. So definitely log in for that. Chris and I, Wednesday morning at 9:30 Eastern. This is not a webinar, so you got to be live in person on either YouTube or on one of our Facebook pages or on Instagram or TikTok. But we go live with a live stream podcast called What the F Happened in the Markets, 9:30 a.m. on Wednesdays. And we have some crazy shit to talk about this week. There's so much happening right now with policy, with inflation, with taxes, with what the banks are doing, with the stock market, with what's going on over the last week. Like there's a lot going on right now in the markets. So we got a lot of really good stuff to rant and rave about this week. So make sure you log in for that. And ask me anything. If you have any other questions, you want to ask live from our team at 4:30 Eastern every Wednesday, we do our Ask Me Anything. Make sure to register for that webinar so you get the reminders and you hop on. But thanks for being here, guys. We'll see you next week. Have a great week. Thank you. Bye-bye.